Despite continual drawdowns among her family of funds, Wood has been unrelenting in her conviction to invest in innovation focused companies, loading up portfolios with companies that have been hit hard by recent pressures and high growth technology stocks. It is obvious Cathie Wood's main drive is her strong convictions about certain companies. Is Wood's approach a satisfactory one? Will this approach be similar to Cardano's? A surge in Cardano's price might be unexpected, but would investors rather miss out? Watch this video until the end to find out. Catherine Woods is a well-known American investor and founder, CEO, and CIO of Ark Invest, an investment management firm. She is often called the most underrated investor in the game, but for good reason. Wood is not only incredibly persuasive in her investment arguments, she has always proven results to defend her surprisingly discerning claims. Born to Irish immigrants in Los Angeles, California, her father played a vital role in pushing her to make her discoveries in life, by contributing the needed support and encouragement. She graduated with honors from Notre Dame Academy and proceeded to the University of South Carolina to bag a degree in finance and economics. This effectively laid the foundation for her success in investment management. After landing a job as an assistant economist at Capital Group, she was able to weather through the career ups and downs, which occurred during and after the 2008-2009 financial crisis, and founded Ark Invest in 2014. When first conceptualizing the central idea behind Ark Invest, Cathie Wood envisioned exchange-traded funds, or ETFs, that were actively managed and based on disruptive innovation. Ark Invest was born, and Wood has gone to accrue her impressive net worth, racking up $50 billion AUM for Ark, and has run 2 of the top 10 female-run funds in the United States. Wood's idea about ETF differs from the norm because Ark Invest chooses to focus only on disruptive information, which means that they are only interested in ETFs that carve their path while also causing a ruckus to the pre-existing path. A vivid example of this is Tesla, which Wood has famously championed for several years now and insists that it will reach $7,000 a share by 2024. This unique strategy in regard to ETFs is all a part of Cathie Wood's outstanding investing philosophy. After working in the industry for over 40 years, she has garnered valuable experience in working with and observing innovators, which was the key to her investing philosophy. Wood prioritizes the kind of approach that leaps across sectors, markets, and even continents to bring in the best and brightest aspects in science, technology, energy, and data that breaks new grounds and paves the path forward. Cryptocurrencies, which were initially created to sidestep old institutions and banks, may finally be feeling themselves getting disrupted. The number of interest investors is showing in decentralized finance applications could threaten the traditional banking world. There has been a share shift when it comes to loans and DeFi. In retrospect to this, Wood stated that banks now have a big problem. Banks now have a big problem. They are losing talent to crypto, so they are raising wages to attract talent, and they are losing business to DeFi. Lending and saving are taking place in DeFi right now. Decentralized finance, which is known to be an umbrella term for the various financial products and services built on the blockchain, has eliminated the need for traditional institutions that have historically provided access to those services. Political institutions are starting to respond to crypto more positively. Wood noted the shift in the stance from the Secretary of the U.S. Treasury, Janet Yellen, who had previously expressed concern on crypto adverse to its potential, environmental problems, and risk of illicit activity. I remember I was asked at that time, and I said that she has not studied the instruments of the new asset class. Well, it seems like she's already boning up, Wood has said. Cathie Wood has once addressed her criticism of passive investing. She described this as backward-looking, and argued that fear has pushed several investors into mimicking indexes, which is kind of mindless. Cathie further believes that passive investing is the most massive misallocation of capital in the history of mankind, exposing the fact that her firm's thesis of investing in disruptive technology is more important than ever, even amid uncertainty in markets. The famous stock picker emphasizes the fact that she still sees explosive growth opportunities ahead, but an increased number of risk-adverse investors have defaulted to benchmarks amid concerns over inflation, the Russia-Ukraine conflict, and the Federal Reserve's upcoming rate hikes. Wood has been addressed as a magnet for criticism, which is a result of her contrarian views and not her gender. By being wavering and publicly vocal about her convictions, Wood has given critics ample opportunity to aim at her unique strategies. Her exchange-traded funds, which focus on disruptive innovation, have suffered year to date. Still, Wood remains among the largest active managers with more than $21 billion invested in her funds. 2022 has been a dismal year so far for Wood's funds, as growth pockets of the market are punished by the surging interest rates. Ark's investment is down to more than 30% and sits at more than 50% from its 52-week high in June of 2021. However, the depreciation in Wood's stocks from mid-February 2021 has not changed Ark's forecasts. Wood claimed that she was just getting her highest conviction stocks at lower prices, which should result in a 30% to 40% compound annual rate of return for Ark strategies over the next 5 years. Furthermore, she stressed the importance of attaching oneself to figures, revealing that doing this would be a great way of setting oneself apart in the financial industry. Ark Invest was the first public asset manager to gain exposure to Bitcoin in September of 2015. Wood claims that the firm still sees Bitcoin price scaling to 1 million by 2030. The world's biggest digital currency, according to Cathie Wood, is a hedge against inflation, but she failed to mention that Bitcoin slid 26% during the past year, while inflation has exploded. Also, consumer prices surged by 7.9%. Cathie Wood is not afraid of making bold predictions. Back in early 2018, she revealed that Tesla shares would go from 300 to 4,000 within 5 years, a potential upside of around 1,200%. Yet Tesla hit the target early. Tesla shares surged past the $800 mark or $4,000 mark on a split-adjusted basis. The turnout was pretty astounding, but Tesla was not Wood's most bullish call. She is a staunch supporter of Bitcoin, and despite some in the crypto world losing their affinity for it. Wood predicted that Bitcoin would crack 1 million by 2030. It has a host of use cases, including it as an insurance policy for people so that their wealth cannot be confiscated. Indeed, Bitcoin was moving in that direction, but the recent crash has made hopes quite slim. Cardano has fallen from this year's high, but that doesn't mean gains are over. This is because the cryptocurrency is at the beginning of its growth story. If it picks up momentum, we may see a serious increase in market value. Let's look at one of the bigger peers. Ethereum's market value tops more than $500 billion. That seems almost out of reach, but maybe it's not. To get there, Cardano doesn't even have to gain as much as it has already gained this year. Can it do that by 2023? Or should we rather adopt Cathie Wood's approach with Coinbase? Even as 2022 stock run deepens, hitting her fund particularly hard, Cathie Wood is moving forward undeterred with her now controversial stock picking strategy. The technology-focused firm purchased 546,000 shares of crypto exchange Coinbase, worth about $30 million. A daily trade report published by the firm shows Wood's Ark snapped up the stock even as Coinbase shares tumbled roughly 30% after unveiling financial results earlier this week that reflected a quarterly loss of $430 million and a 19% drop in monthly users. The move also came amid a broader sell-off in cryptocurrencies after Terra USD, a stablecoin pegged to the US dollar, which had plummeted recently. The plunge in Coinbase shares sent Wood's flagship Ark Innovation ETF down more than 10%, extending a 5-day slide that pushed the actively managed exchange-traded fund closer to its March 2020 price level when the markets crashed at the start of COVID-19 pandemic. Still, Wood Ark Invest purchased about $29 million worth of Coinbase stock across 3 of its ETFs. Despite continuing drawdowns among her family funds, Woods has been unrelenting in her conviction to invest in innovation-focused companies, loading up portfolios across Ark with companies that have been hit hard by recent pressures in high growth and technology stocks. So, should we allow our firm convictions about Cardano to override its current financial plunge? The fear of missing out is grave, and Cardano's future is quite promising. Should we go ahead and buy the coin blindly, just like Cathie Wood did? Let us know your thoughts in the comments section. Also, be sure to click on the subscribe and bell buttons.